Greetings, everyone, and welcome to the Royce Report, where we provide detailed information on how to grow and expand your company and how to have your business operate more effectively and efficiently. I'm Todd Smith, and if you have not already done so, please hit subscribe, hit the bell as well, and you will be notified each and every time a new video is posted. The SBA loan programs are great loans for the small business community. The last federal fiscal year alone, they accounted for $44.8 billion in loans to 61,000 different businesses. Now, that includes the three major SBA loan programs, which are the microloan, the SBA 7A, and the SBA 504. For a more detailed description on those programs, please go to a video I posted a few weeks back. The question of the week is, where do I begin obtaining an SBA loan and what are the requirements? What I'm going to review today applies to all three of the major SBA loans. The first place to begin is to choose a lender. There are many SBA lenders available to the business community today, and they all operate under the umbrella of the SBA. They are entitled to set certain criteria, such as credit score, a business with real estate, maybe not one without real estate. They may do startups. They'll only do existing businesses. Those are just some of the criteria that the lenders are allowed to establish for themselves. For me, packaging and placing business loans such as this on behalf of my clients for the last 15 years, I have found the small community banks to be a lot more accommodating than the larger national banks. So that's a great place to begin. Also with the SBA, many smaller regional banks do have SBA lending arms or lending the ability to lend in many of the different states. So the first place to begin is to choose a specific lender that will be accommodating to your business and to your scenario. These are the documents that you are going to need to submit, and the more organized you are at the beginning, the easier the underwriting process will be. You'll have to submit at a minimum 2 years of your most completed tax returns for yourself, your personal tax returns, and if it's an existing business, your business tax returns. Now, if you are a person that files an extension and you're in between April 15th and October 15th, more than likely you are going to have to submit those tax returns to get through the underwriting process. A personal financial statement. Now, a personal financial statement is simply a balance sheet and a profit and loss statement for you personally or your household. If you were married, you're going to have to submit it based upon your household, and your wife or your husband, your spouse, is going to need to be on the personal financial statement because the lenders are going to look at global cash flow as well as business cash flow. They want to make sure that the business can support the household, or a spouse that's not going to be in the business can support the household. So you're going to need to submit a household personal financial statement, one that includes your spouse. If you are using this loan to purchase a building or a piece of equipment, you're going to need to submit the sales contract or the cost of equipment on the vendor's letterhead. Piece of equipment will also need to have a cut sheet. A cut sheet is a detailed description of the equipment itself. If it is for real estate, you're going to need to submit pictures of the real estate along with the sales contract. And yes, before you submit for a loan application, you're going to have a contract of sale on the specific real estate. A business plan. Yes, you're going to have to submit a detailed business plan. Here are some of the items that need to be in the business plan. Your bio. Bios are extremely critical on the owner and the key employees. The lender wants to know is who's going to be running the business, the owner, and then what's the background of the key employees, because they really are effective and efficient in generating revenue and having the business operate at its optimum capacity and efficiency. You're going to have to do a SWOT analysis, and you're also going to have to provide how does your product or service fit into the marketplace, and some descriptions on your competition. We all have competition. As a venture capitalist told me once, the last thing they like to hear, and the lenders do as well, that a business has no competition, because they look at it this way. There is no marketplace for your product or service, or the business owner is somewhat foolish. If this is an existing business, you're going to have to submit interim financials, balance sheet, and profit and loss statement. You're going to have to submit aging of accounts receivable and accounts payable, and a schedule of business liabilities, and they all need to be dated the same date. For example, if your P&L rather is dated, say, the end of May of 2022, then the aging of receivables, the aging of payables, and the schedule of business liabilities need to be on that date as well. Now, the loan process will take longer than 60 to 90 days. It's just the way the system is with all the due diligence in today's world, that please be prepared that you're probably going to have to update as the loan moves forward, because they age out every 60 to 90 days. You're going to need to submit 3 years of business projections by month. They have to be detailed, and they will need to include what your assumptions are. Now, if this is an existing business, it's a little bit easier. If it's a new business, it becomes a little bit more difficult, though they can be done. And I've had businesses have their loans approved, startup businesses, based upon the projections. Credit is always an issue, or always important for any loan application. For small business, your personal credit is really critical. There are minimums on the SBA, and they are rather accommodating, though the lenders set their own minimums. I've had the luxury of pushing loans through with credit scores in the 670s, because it's just not the score. Sometimes it is what's behind the score. For example, if you have a lot of business loans that are affecting your credit score on a personal level because you've signed for them, and part of the loan is to refinance them out, then that's a different credit score. That 670 credit score is different than a person who has a 670 credit score that is not paying their indebtedness on time. It's the same thing with bankruptcies. Bankruptcies are all looked at differently. A person who has had a bankruptcy because of a severe illness or of a car accident or some other accident that took them out of the workplace for 6 or 9 months is looked at differently than if someone is irresponsible paying their bills and their obligations. If you were going to rent a piece of property to operate your business from, you'll have to submit the lease. The lease terms are critical to the loan application. First of all, the lease payment will need to be accounted for in the profit and loss statement, or rather the projections, and also your loan needs to be 1 day shorter than the lease term. And why is that? Well, let's just say a lender loans you money on 10 years and your lease is only for 5 years. Well, where are you going to operate your business from through years 6 through 10? That new lease may create a situation where you'll have to close your doors, or your rent may increase dramatically. So the longer the lease, the longer the loan term can be. It has to be 1 day shorter than the terms of the lease. Remember, the more thorough you are at the beginning, the more efficient the underwriting process will be. Take a look at it from this perspective. If you were building a building, the more detailed the drawings are at the beginning, the smoother the construction will be. If you have any questions, please email me. My email's below, or leave it in the chat. And again, please hit subscribe, hit the bell as well. And until we meet again, be well, be safe, be happy, be successful, and always prepare to win.